Larry, so good to see you. I'm glad you have time because I want to talk through the headlines right now, talk about markets and geopolitics with the question, when will stocks recover? Rising tensions in Iran have pushed oil prices higher and created short-term volatility in the markets. Historically, however, geopolitical conflicts tend to have only a temporary impact on stocks. But just to point this out, what we're looking at, what we're feeling right now, this is a look at the S&P 500's 1-month performance. We see a lot of red on the board. Why do we tend to see stocks fall first when tensions rise?
Yeah, Aaron, it's certainly an ugly picture for the last
Yeah.
30 days. But, the market is just clearly, frankly, they just do not like uncertainty. I mean, the market
Mm.
likes certainty. They want to know what's going on in the areas. And when you have these wars and we don't know when they're going to end, that uncertainty shows on in the window there.
Yeah, seeing a lot of red. Okay, so let's talk this through because, Larry, I know that you are a student of history. You love to talk about the data here. So history shows the S&P usually recovers quickly from geopolitical events. And here is a look at several of those events and mostly short, shallow pullbacks. Explain what we're looking at, please.
Yeah, absolutely. If you look over in the far right-hand corner in the bottom there, you see that most of these conflicts, when they happen and the market pulls back, it's usually it is less than 100 days before you see the
Mm,
recovery, and if you look at the drawdown, it's less than a 10% drawdown.
yeah.
There are a few outliers like Pearl Harbor, it's a few more days. Iraq invades Kuwait, you see that. But for the most part, once the war is over and once that there's certainty in the market, it's a quick recovery in most cases.
Yeah, and also we don't want to miss that recovery. That's a good reminder. So for investors then who are watching these headlines and rising oil prices, what's the most important perspective to keep in mind before making portfolio decisions?
Again, just look at it. I mean, one of the things that we've always done, Aaron, is we prepare for these kind of, I don't want to say conflicts. You don't expect that every day, but you prepare for volatility in the market.
Yeah.
There's always something that's going to cause some conflict and some volatility. So you just need to prepare the plan before these kind of things happen, and that's what we've done with our clients. Some both short term and long term monies, to where you don't worry about the short term issues.
Yeah, good point. And then, of course, when you have that plan, you are less likely to make emotional decisions with your money, which brings us to my last question, Larry. Can you just explain why emotional investing tends to lead to bad financial decisions?
Absolutely. As you see, this chart is perfect. As you have the euphoria, the excitement, the market's going up, the thrill, the euphoria. That's when you get a lot of phone calls, people wanting, hey, I want more of my
Mhm.
money at risk. I mean, the market's killing it. We see this coming. And then it starts dropping and get me out. So, they say most people excited about that, but they end up buying high and selling low. What we do is create a plan based on the data, so if you use the data and create a clear plan, you don't ride this roller coaster that it is. So it's easy to understand why people do it. The news media throws it out there, but I mean, just use the data and create a good plan.
Yes. And when you have that plan, brings peace of mind. You can rest assured knowing that you can even take advantage of this volatility, maybe. So, Larry, if someone is feeling uneasy and wants to talk to you about creating that financial plan that's in line with their risk tolerance, what's the best way to reach you?
Yeah, they can call our office, area code 615-216-1068, or they can go to sfawealth.com.
Great. Larry, thanks again for your time today. I really appreciate it.
Thank you, Aaron.